All right. Again, I'm going to talk about the Pandemic Market Volatility Assistance Program and also a little about the Dairy Donation Program, hopefully if I don't run out of time. For those of you who have been to our webinars before, you know that we like to jam pack our PowerPoints full of links to good resources. And so later on today, hopefully, or tomorrow by the latest, we will have the PowerPoints up for you. They go on to our events page on our website related to this particular event. So there's a page where you would have gone maybe to register for this, for example, and that's where they will be for you to download them for your own use. And again, I really try to treat these like resources by packing them full of all sorts of good links for you to take a look at. Okay, these two programs are it's hard to imagine that it was, the third quarter was just over a little while ago. Of course, we're into December now, but it seems like ages ago when some of these things came into being, or they seem like such old news, but really they were not that old news. Excuse me. Before we go and get started, here's our attendance check code word. The second code word is pandemic. So you got the first code word earlier. And again, make sure you submit your attendance form by tomorrow so we can make sure that we get them in time, because there is a deadline. And I forget what exactly it is, but so many days after the actual event. Okay, now the Pandemic Market Volatility Assistance Program is really, another form of government payment. Not a disaster payments per se, but these other types of ad hoc payments that seemingly the ag economy has been living on recently. And by the way, just want to make sure, can you see my screen? Are you seeing?
You're good, Brooke. It's good.
Yeah, okay. All right, just making sure. So I thought it would be nice, it would be good to maybe put this in context. We've been living off of these government payment programs, and this is just another one. However, this one has a little bit of a novel and I find interesting background in terms of why it came into being, really, and many of you are certainly probably aware of that. But let's just look at the these general ideas of where have government payments been in the farm income spectrum here. And this little chart, actually from a CRS report, gives us a good graphic indication of, in the last several years here, the red portion of these bars indicates sort of the category of ad hoc payments that we're talking about here. And if we go backwards to, this is 2021, 2020 was obviously the biggest year, 2019 and 2018. You'll remember that, of course, the farm income numbers were really skewed in 18 and 19, or at least they were certainly supplemented greatly by government payments in the form of these market facilitation payments, the trade aid that was to make up for the so-called trade war with China. And then, of course, we transitioned immediately into the COVID-19 related ad hoc government payments, which makes for this giant spike in 2020. And then we have obviously a reduction in that quantity of payments in 2021, but we continue to have essentially a farm income picture that is disproportionately made up of government payments. So here's a couple other slides to illustrate that. And if you take a look, this is maybe a little hard to see depending on what size screen you have, but if you look down here at the bottom, here are the supplemental and ad hoc disaster assistance, and we are going to specifically be looking at USDA pandemic assistance and then other non-USDA pandemic assistance. And if you go across and you follow over to the years in question, here you see the big numbers. And you also see, by the way, here's the trade aid number here, this market facilitation line across here. But here's where you see the farm income picture really getting skewed by these actual, the pandemic payments, specifically in this particular graphic, since they have the market facilitation separated out. And it just raises that question of where are we headed, in the sense that we are now into our fourth year, shall we say, of significant ad hoc payments. And this 2021 line, what is 2022 going to look like? Some of the money that was authorized at the tail end of the last administration under the Consolidated Appropriations Act that was enacted in late December of 2020, as well as the American Rescue Plan Act, that massive billions of dollars worth of funding, much of it is not even pushed out the door yet. So, when we try to think what is the next year going to look like here in this particular bar chart, we are certainly going to continue this trend with this large share of farm income coming from government payments. And in fact, here is a little microcosm of Pennsylvania. And here's the part that I included this to show. Go back, is that right here you have net farm income, and you have this 1.5 billion, and then you have government payments making up essentially a third of that, which is perhaps, I'm no economist, but perhaps that's a troubling number to try to put your arms around. And the question always arises, where are we going to be when these things go away? And then here's just another little graphic that I pulled from the same sources. And I think this was a USDA Economic Research Service site, but it gives you a little bit of an idea of, here's just a chart just for Pennsylvania and government payments in the years 2008 through 2020. And then so that you obviously see this giant upswing. Now we have a little bit of a downswing since this stops in 2020. But it's going to be down, but it's not going to be down into the levels where it was in previous years, not for a few more years now. And once we try to spend all this money that has been appropriated, particularly at the end of last year, the beginning of this year. And here it shows you where Pennsylvania ranks in terms of government payments. Nationally, it's 27th. This gives you just a general idea of total cash receipts, in Pennsylvania, and what does dairy make up? And obviously you see that it is, number one in terms of cash receipts. So that's just a little background. Now let's talk about the Pandemic Market Volatility Assistance Program. Unlike other of the ad hoc government payments that have been pushed out the door by USDA and others in the COVID-19 era, shall we say, this one had a much different genesis than just simply basic downward trends caused by COVID-19 or basic market disruptions caused by COVID-19. This was a mixed bag of things which had other causes to it. And that way, in that way, I think it's a very unique program in the grand scheme of all of the different ad hoc government payments that we've seen in the last several years. It was announced in August 19th, or end of August, or middle of August, August 19th. However, it was using funds that were appropriated in the Consolidated Appropriations Act from last year, as well as other monies, even CCC monies, I believe, that were at USDA's disposal prior to that. This was, I'll get to that in a minute. I'll hold on and talk about a little about the genesis of it. But essentially, the program is initially to distribute $300 million to dairy producers for lost revenue that was suffered between the period of July and December 2020. So it does end, and any losses, market disruptions, et cetera, after December 2020 are not accounted for in this particular program. Maybe they will be in the future addressed in some way. Maybe they won't. This is $350 million, and we'll talk about where that number comes from and its relationship to other numbers in a minute. It's for losses due to, and this is my words now, dairy market and pricing abnormalities, the unintended consequences of the large negative class 1 producer price differential calculation from this change that was made in the price formula via the 2018 Farm Bill. And many people on this webinar are very familiar with all of that. And the precipitous class 1 and class 3 federal pool revenue shortfalls under the existing federal milk marketing order system that was essentially caused by the pricing calculation, the class 1 price calculation that was altered in the 2018 Farm Bill, which in the end resulted in less money going into the pools. So precipitous drops in essentially revenue into the pool to be split up. Now, USDA stated in August that they would ultimately provide $2 billion for dairy industry pandemic relief, and they're just calling it pandemic relief. We're going to hear from some other parties in subsequent slides here, and it would all be administered under USDA's Ag Marketing Service dairy programs generally. The initial eligible reimbursement will be for 80% of the revenue difference per month based on annual production numbers on volume up to 5 million pounds per producer, over that period of time from January 2020 to December 2020. Many of you on this call may have a better handle than I do on the size of a dairy operation that might exceed 5 million pounds in that 12-month span. But certainly one of the issues here is that there is a lot of production that is not covered by these payments. In other words, farms that are producing more than 5 million pounds over that period of time are not going to get any of that excess production covered by any of these payments. And of course, there's an 80% payment rate on losses anyway. So essentially, the producer's eating 20% of their provable losses to begin with. So there's a cap and there's a percentage, almost like a deductible. Now, the payment rate's going to vary by what milk marketing order you're in, and the actual losses on the pooled milk in that particular federal milk marketing order. USDA will make payments through agreements with independent haulers and cooperatives, independent handlers, milk dealers, who will be reimbursed for administrative costs, but they will be the ones distributing the monies basically on the same basis as they paid producers in the period from July to December, using the same quantities of milk, et cetera. And we'll get to the little equation in a second. USDA is essentially going to take it upon itself to communicate with all of the eligible handlers, dealers, processors, and cooperatives about the participation terms in this program, and then they will distribute money to those entities, the handlers and cooperatives, to then pay their producers in accordance with what the producers essentially sold to them, or was what was marketed through them in that period from January 2020 to December 2020. So in other words, it's in some ways an offloading of the government's role in distribution of the funding. They're giving it to the dealers, processors, and co-ops and saying, here is money for you to distribute to the dairy farmers that you procure or market for, and or procure from or market for, and you will now distribute it. We will simply audit your handling of this government money. And you know, in that simple fact right there, it's perhaps a bit more novel than the kind of direct payment programs that we've seen in recent times. Don't think there's any of the pandemic related ones that quite operate in this way. And there's this tight time frame that they thought they would be able to make, which is sign an agreement with a cooperative or a processor, and 60 days later, somehow get them the money, and we'll get to in terms of how you measure that money, and then the processor or cooperative has 30 days thereafter to distribute it to the producers. Very ambitious for the kind of money that we're talking about here. You know, $350 million being pushed out the door in that way. And of course, then you got to follow up and do all the auditing. Now, let's go into a little context to all of this, which I'm going to sort of quote some statements from various parties that provide some of the context here. In June of 2021, Secretary Vilsack committed to providing some type of additional pandemic assistance for dairy farmers in exchange, in public, in the Senate Appropriations Committee with Chairman Senator Leahy. And no coincidence then that he announced the program in Vermont afterwards in August, so a couple months later. So he was committed to this in public without really providing any details. Everybody all of a sudden heard Secretary Vilsack that there was going to be pandemic assistance directly to dairy farmers in relation to the market problems and the pricing problems that were experienced in 2021. And in addition to, meaning it was in addition to what smaller amounts may have been in existence under CFAP, for example. This targeted assistance was to be the first step in this total package of $2 billion to the dairy industry. Well, we've seen $350 million here. We've seen $400 million, which we'll talk about later in the dairy donation program, but there's still quite a long way to go to expend this $2 billion. So I'm only mentioning that because we have more to see, let's say, with regard to what other programs are going to be unveiled and pushed out in the coming months in order to try to reach this number of $2 billion. The other number that's interesting is, and it was mentioned earlier when Chloe was giving her presentation, that there was a number of, I think it was 6 billion tossed around total. The program is part of 6 billion in pandemic assistance announced in March of 2021 to address a number of gaps and disparities in previous rounds of assistance, meaning to the dairy industry. Well, that's another 4 billion on top. So we have a long way to go to see what's going to make up all of these other funds and these other assistance programs that are going to first reach a threshold of 2 billion, and then this total threshold of 6 billion. So there's a lot more unspent money is basically the point. Let's see if I want to cover anything else on this particular slide. Yeah, okay. Well, I will go ahead and wait a minute. There we go. Now, from the other side of the coin, you hear from National Milk Producers Federation. You know, they started to sort of engage in a little bit of a, and I won't get it, it really wasn't that overt, but a little bit of a battle with the press releases in the sense that, you know, their position on this was, well, this is not a pandemic related assistance program that that everyone, perhaps the way to say it is that everyone had clean hands in its creation or what created it. This was a problem that was caused by actions that the government took in two ways. One was changing this previous class 1 mover, which was essentially just a pricing calculation for class 1 milk in the federal pooling system, through the 2018 Farm Bill. And there are those, of course, who would say that the federal milk marketing order system operates on petitions and administrative proceedings, not dictates of Congress through the Farm Bill, at least with regard to things like a pricing calculation. But in this case, essentially, the authority was taken out of the administrative process, and Congress dictated a change in the Farm Bill to a particular pricing calculation, which, as we all know now, somewhat backfired. And National Milk was very pointedly pointing out that the amount of actual losses that they were attributing to this particular problem was 750 million, not 350 million. So that's sort of the other side of the coin here, is that the industry is saying, well, 350 million is great, but what we're really out due to this problem was 750 million. The other contributing governmental action that some would say contributed to this equally, or at least in a significant share, was the government purchases of cheese that were being done under various pandemic relief efforts, the food box program, and that of course had this skewing effect on class 3 milk, which then further contributed to this problem. So my point is simply that, unlike other government payments and ad hoc, assistance payments, perhaps not everyone had the cleanest hands in this particular occurrence, and this particular occurrence wasn't all pandemic related. Yes, the cheese was being purchased due to the pandemic, but this had a lot more backstory to it in terms of what brought this all about. Now, National Milk also, of course, was immediately indicating that the 5 million, is it 5 million? Yes, the 5 million pound limit, and that only 80% of the losses would be covered, was already leaving everybody short. And so they've been on that since day one, as this program's nice and we're not going to complain about it, but or perhaps we say we're not going to refuse it, but it certainly, in their eyes, is not sufficient to make up for what had transpired. Now, those of you who know that National Milk had a large role in the changing of the class 1 milk price, the mover formula, which was ultimately accomplished through the 2018 Farm Bill. So National Milk doesn't necessarily have the cleanest hands in the cause of this either. I'll go ahead to the next slide so we can keep moving here. We'll just see if there's anything else I want to cover in here. All right, here is a nice way of illustrating where the $750 million number that this 350 million is meant to address, where that 750 comes from. It's right here. And essentially, this shows you, if the change had not been made in the class 1 pricing formula that caused such havoc in the year 2020, what additional revenue would have been made by dairy farmers throughout the course of 2020? And that's over here on the far end of this bar chart. Well, that's what these blue bars are over here. And if you total these all up, that's $750 million. So that's the $750 million that wasn't made during 2020 that would have been made had this pricing calculation not been changed. And this is from a great publication from American Farm Bureau Federation, its Market Intel column, this guide to class 1 milk formula options, which talks about all of the competing sort of milk marketing order reform ideas that are floating around. I think I'll skip this one so I can keep making some headway here.
And if I can just interject here, if
Yes,
anyone
go
does
ahead.
have any questions, please submit those in the Q&A tab.
Yeah, please do. I will definitely try to wrap up so that we can have some questions, some Q&A, and we can stay longer for those who want. Okay, so how does this pandemic market volatility assistance program work? Well, Herbine and Company actually has a really nice blog entry where they sort of break it all down in a very step-by-step approach. So I'm just borrowing things, to some degree that they have pointed out about it. USDA is going to establish these individual agreements with each handler and each cooperative. Once the agreement is made, then they provide the total eligible milk data. In other words, how much milk did they purchase and market through that period of time, so that then there can begin to be a payment calculation made, so that essentially USDA knows how much to give to that cooperative or that handler to pay to its producers. Next, then USDA would distribute this money to these handlers and cooperatives, who in turn would, of course, distribute it to their individual dairy farmers or farmer members. If you're no longer in business or that you've switched markets since then, that's fine. You're going to get paid on what happened in 2020. If you're in multiple orders, you're going to get paid from whoever marketed or purchased your milk for you is going to pay you for that portion of milk. It might be split among several orders if your milk ends up going into several federal orders. Again, the payments are supposed to be made 30 days after the handlers or the cooperatives receive them. You can imagine how difficult this is going to be. Cooperatives, of course, and this is Herbine's word, reblend. I don't necessarily use that term myself, but cooperatives can pay their members exactly as the cooperative is organized and set up to pay its members. In other words, the cooperative shares in the proceeds of all of its members' milk sales, and this is no different. Pool plants, must pay the dairy cooperative at least the minimum amount due for the milk received. Actually, same point again. I won't even worry about that. Now, Herbine makes a good point, which is in many parts of the country have to deal with this, but of course we have plain sec producers in our part of the country. Plain sec producers are not going to be receiving these monies because they will refuse them. So that's going to have to be dealt with in our part of the country anyway. And that's going to end up being a matter between the handler or cooperative and USDA to indicate to them how much might have been from plain sec producers who are going to refuse the payments, because then the USDA is not going to essentially provide them those funds. Here's a little bit of a diagram that shows you the basics. And again, this may be very obvious to some, but here's some representative months in 2020. Shows you, okay, the way it's going to be calculated is under the current method, the 2018 Farm Bill changed to the Class 1 pricing formula. Let's say that the Class 1 price ended up being $10.62. And if that change hadn't been made, then the price would have been $13.29. So the difference is $2.67. So it's simply a calculation to establish the differences, this far right-hand column. And then essentially it will be an equation from there. I think I have that on the next page, if I believe so. Once the difference is determined, it's multiplied by the utilization rate for that particular order. Whoever a cooperative is wherever they're figuring out what producers they're going to pay in what order, and the same thing for a processor, and then it's reduced to 80%. So fairly simple idea. Now, again, you're subject to the $5 million cap per producer for that entire period of time. And also, just to add, the general adjusted gross income number of $900,000 per producer is in effect, and that's the same sort of gatekeeping device that existed in the CFAP2 program, and 75% of their adjusted gross income must come from farming, et cetera. So same type of gatekeeping devices as existed in the CFAP program in terms of eligibility. All right, let me go forward. Do we have any questions, by the way, Ross? Nope. Okay, please, if you got something, let's
No questions.
okay. All
And
right.
if we could, if you could move on to the dairy donation, and then we can officially end the webinar at the top of the hour. And then if people want to have a discussion afterwards, you could stick around to do that. But if we could kind of officially end it at the top of the hour.
So in addition, under the Pandemic Market Volatility Assistance Program, there's some extras. There's an education requirement that the processor or cooperative is to provide certain education to its producers. It's kind of an add-on. It doesn't even have to be education about this particular program. There was a timeline set forth. I've got this marked in red because it was quite ambitious and not particularly realistic. What you see now when you go on the USDA's website is this little box at the very top that explains basically that they're moving as fast as they can. And about all they can commit to at this point is that they anticipate eligible dairy farmers will receive payments during January and February of 2022. Some of you in attendance may even be involved in some of this discussion. I don't even know if the processors and cooperatives have been able to sign the agreements and get the data back to USDA to let USDA know how much a gross amount of money needs to be sent to that particular processor or that particular cooperative to distribute to its producers. So it remains to be seen how this timeline is going to go and how far into 2022 we're going to be before anybody actually gets a check. Now, the dairy donation program, different story. We've been talking about producers. This is now a program that was to provide some degree of relief to processors, but producers can also be eligible. Now, just to clear the air, there has been in existence for quite some time another program that was called the Milk Donation Reimbursement Program. And that came from the 2018 Farm Bill, and it was funded with $9 million. Whoop, wait a minute. It was funded with $9 million initially, and then $5 million for 2020, and then every year thereafter. Now, with the Consolidated Appropriations Act that was at the end of 2020, this is not rescue plan money, this is from the end of 2020, prior Congress and prior administration, all of a sudden it got this infusion of $4 million, and they've essentially combined this older program, the Milk Donation Reimbursement Program, with the Dairy Donation Program, so that they're operating under basically the same definitions, same eligibility rules, et cetera. Program eligibility is essentially that you need to be an eligible dairy organization, and then there's some there is a little bit of a definition of what that is, and you have to meet two conditions. You have to account to a federal milk marketing order, and that has now been changed to mean all you have to do is be required to file reporting to them, not to actually be in any way paying their classified prices for anything. And you have to incur a qualified expense. And then what will happen is you will file with USDA on milk that you either donate or that you discount to be reimbursed. And the reimbursement can be for several different things. Input costs, in other words, the costs of your raw milk, the costs of your raw milk, or manufacturing costs, or transportation costs. And this entire program is retroactive back to January 1 of 2020. And there's a $50 million cap per entity that is applying. So in other words, for milk that you're sending into the charitable food system, you can be reimbursed for these three categories of expenses. Now, tax deductibility is another question entirely, and I think it's safe to say that if you're receiving any kind of reimbursement for these types of expenses, that destroys the tax deductibility of any such donation. However, it's a business decision as to which, what's more appropriate for an entity in its balance sheet, outright donations or participating in a program of this nature. So with that, I will conclude, and we can open for any questions.